In 2020, Paris Saint-Germain walked into a Champions League final having spent more money than almost any club in football history. They lost 1-0 to a Bayern Munich side assembled for a fraction of the cost, $120 million for the entire starting lineup. That Bayern squad cost less than what PSG paid for Neymar alone. PSG's net spend on transfers since Qatar Sports Investments took over in 2011 exceeds $1.5 billion. One final, one defeat, 0 trophies, and the reason isn't what you think. It's not the dressing room, it's not the tactics. It's a number buried on their balance sheet that almost nobody has ever explained, and that's exactly what we're going to do today. The accounting I am about to reveal made winning the Champions League structurally harder the more PSG spent. Qatar Sports Investments bought PSG in 2011 for just $50 million. The club had a modest stadium and total annual revenues of $99 million. Their mission was explicit: turn PSG into the best club in the world, starting immediately. The spending that followed was almost incomprehensible in scale. By 2024, PSG had spent over $2.28 billion gross on player transfers, more than any club in French football history, and more than almost any club in the world. They signed Neymar for a world record $222 million in 2017. They brought in Kylian Mbappe for $145 million a year later. They then added Lionel Messi on a nominal free transfer in 2021, which, given his wages, was anything but free. At their peak in 2022-23, Mbappe, Messi and Neymar combined earned $210 million gross in a single season. 3 players, $210 million per year. On the pitch, the Champions League kept slipping through their fingers. The most infamous moment, in 2017, PSG beat Barcelona 4-0 at home in the round of 16, then lost 6-1 away in one of the most catastrophic collapses in football history. In 2022, Benzema scored a hat-trick in 17 minutes to eliminate them. In 2024, Borussia Dortmund knocked them out in the semi-finals on a 2-0 aggregate. So how does a club that spends like that consistently fail to win Europe? Let's look at the actual numbers. The first thing most people misunderstand is how PSG's transfer spending actually hits their accounts. When PSG paid $222 million for Neymar, that fee did not appear as a $222 million cost in year 1. As an accountant, this is the first thing I noticed when I looked at their balance sheet. It's spread. Under football accounting rules, transfer fees are amortized, divided equally over the length of the player's contract. Neymar signed a 5-year deal, so PSG logged $44.4 million per year as an amortization charge against profit every single year for 5 years. Add Mbappe's $145 million fee amortized alongside it, and in their first full season together, PSG was absorbing over $70 million per year in amortization charges before paying a single euro in wages. That's before a ticket is sold, before a shirt is printed, before the lights in the stadium are even switched on. Now here's where it gets interesting. That amortization charge sits on the balance sheet as an intangible asset. Neymar wasn't listed as a $222 million expense. He was listed as a $222 million asset, one that depreciated at $44.4 million per year. In year 1, PSG's books showed a Neymar-shaped asset worth $177.6 million. Any serious injury, any performance dip, and UEFA or auditors could demand an impairment write-down. That is a financial exposure most football fans don't even know is sitting there. The amortization was manageable in isolation. What was not manageable was layering it on top of a wage structure that had no precedent in the history of football. In 2022-23, Mbappe earned $19 million gross, Messi earned $63 million gross, and Neymar earned $56 million gross. That is $210 million gross per year for 3 players on a combined basis. For context, the entire Bayern Munich squad that beat PSG in the 2020 Champions League final was assembled for $120 million, less than what PSG paid those 3 players in wages alone in a single season. By 2023, PSG's total wage bill had hit a reported $645 million, the highest ever recorded for any football club. Their total revenue in that same period sat at approximately $582 million. That means PSG was spending more on wages alone than they were generating in total income from every source combined. That gap has a formal name in accounting. It's a structural operating loss. And PSG were running one every single year of the project. You cannot run structural losses of that magnitude without UEFA responding. Financial fair play regulations require clubs to break even or get within an accepted threshold over a rolling 3-year window. PSG's losses were so severe that UEFA intervened twice. In 2014, PSG paid a $60 million settlement and agreed to freeze their wage bill for 2 seasons and significantly restrict transfer spending, which hit them at exactly the moment they were trying to build a squad capable of competing in Europe. In 2022, UEFA fined them again, $10 million unconditional, with up to $65 million more conditional on future compliance. And in 2021 to 22 alone, PSG posted net losses of $369 million. That is not a rounding error. That is a structurally broken balance sheet in a club that was supposed to be football's financial dominant force. Every time PSG tried to accelerate spending toward a Champions League title, FFP applied the brakes. And the fines, the restrictions, the spending freezes always landed in the middle of a squad-building cycle. Here is the fundamental problem that every other analysis misses. PSG play in Ligue 1. Ligue 1 distributes approximately $142 million total to all of its clubs this season. PSG, the champions, France's biggest club, receives around $30 million from domestic broadcast rights. By comparison, a mid-table Premier League side earns more from TV money alone, and Real Madrid earned $179 million just from broadcasting in 2022-23. Domestic broadcasting accounted for only 8% of PSG's total revenue in 2022-23. While that sounds like strength, it isn't. It means PSG's revenue is almost entirely dependent on commercial sponsorships and matchday income from a 47,000-seat stadium. Meanwhile, the clubs they were competing against in the Champions League were collecting 9-figure broadcast distributions every single year, regardless of sponsorship results, regardless of on-pitch performance. Under FFP, allowable spending is calculated against real football revenue. And PSG's real football revenue, stripped of related party sponsorship deals, was structurally lower than Bayern's, Real Madrid's, and Liverpool's. The Qatari investment could paper over that gap with injections of capital, but capital injections don't qualify as football revenue under the FFP break-even calculation. They show up as owner equity, and UEFA is very clear about the distinction. Here's what everyone gets wrong about the PSG project, and why this story is more interesting from an accounting perspective than from a football one. The standard narrative is that PSG bought the wrong players, had a toxic dressing room, or lacked a winning mentality. Those observations may be accurate, but they are symptoms. The root cause is that the financial architecture supporting the entire project was built on a revenue figure that UEFA determined was artificially inflated. Here's the real reason nobody talks about. PSG's major commercial sponsors included Qatar Tourism Authority and Qatar Airways, entities directly connected to the Qatari state that also owned the club. UEFA investigated whether these deals were priced at genuine market rates or whether they were effectively the owner paying themselves inflated sponsorship fees to manufacture artificial break-even compliance under FFP rules. UEFA's investigators concluded that PSG had overreported commercial revenue by $199 million as part of their break-even calculations. Let that figure land. The revenue that was used to justify Neymar's $222 million world record transfer. The commercial income that was supposed to prove PSG could afford this level of spending under the rules was partially constructed from inflated deals with entities connected to the club's own ownership group. This is the insight that only becomes visible when you read the balance sheet, not the headlines. PSG didn't just overspend. They attempted to engineer their revenue base to create FFP headroom. When UEFA challenged those numbers, the spending restrictions followed, the squad-building momentum stalled, and the window for winning the Champions League with Neymar and Mbappe closed before it was ever truly opened. The core lesson is brutal in its simplicity. You cannot buy a Champions League if your revenue model is structurally weaker than the clubs you are competing against, and you certainly cannot sustain it when the accounting that justifies your spending collapses under regulatory scrutiny. This is precisely why the same story keeps repeating across football. Large owners acquire famous clubs, commit to eye-watering transfer budgets, and then discover that financial fair play doesn't just regulate expenditure, it scrutinizes the quality of your revenue. Inflated sponsorships from related parties will not protect you, a weak domestic broadcast market will not be forgiven, and a wage bill larger than your total revenue will always eventually catch up with you. And talking about wages, you will absolutely be fascinated with this next video where I break down how exactly footballers make money. Click it and I will see you there. Cheers!